Welcome out to the weekend review and playbook prep from Peak Horizons Capital. It is July 3rd, 2026. This is part of our routine as we do a market analysis and preparation for the week ahead. Let's jump right in. We'll go ahead and start out looking at our market regime gauges like we always do. Currently, we have the market in a neutral and uncertain market. As we talk today, we'll go through why that is. But the intermediate trend and the short-term trend still remain bullish from a technical standpoint. Let's go ahead and jump in and look at some of this. The intermediate trend, we look at price of the SP 500 compared to the 30-week moving average. Price will either be green or red. The 30-week moving average is orange. You can see that we are above the 30-week. We're moving sideways in a little consolidation, but this is a bullish trend. If we go back, you can kind of see that as long as we stay bullish above and bearish below that 30-week moving average, it tends to work out pretty good as far as having the trend play in our favor. So that's what we're doing. We'll basically be looking to see if there's a pullback in the market to add exposure. We're looking to see if there's some rotation. We'll talk about that as we move forward. Here's the short-term trend. This is day-by-day analysis. You can see a huge move off the bottom, but now the market's just kind of going sideways. And if we look at the last few days, a nice move off the bottom, but the last 2 days sideways have been kind of difficult. The market's been rotating out of what was the leaders into now what happened to be the laggards. And you can see some volatility here. 2 days ago, we had a doji candle, which is we open and close at the same spot, but then we have some sort of range that price plays in. What you'd like to see if you see something like this is either tighter or the market to make a decision bullish if that's the way you're leaning. We are, because the intermediate trend is bullish. Unfortunately, what we've had here is a range that has expanded above the high of the day before and a range below. The real only positive here is there was some buying at the end of the day, pushing price back up to this certain area. So we're looking to see what the market might end up deciding to do. While we're still playing offense, we are having a mentality of some caution. I'm going to show you under the hood, and we usually call some of this stuff breadth. When we get to the breadth slide, I'll actually talk about what breadth means. But under the hood, we'll first look at the trend, and we can see that we have a trend that isn't positive, but breadth is positive and sentiment's positive. And so these are very conflicting signals. We'd like to have as much of this stuff line up as possible. We'll look at something called the momentum oscillator, price momentum oscillator. Usually when we have momentum in the market, price is either going up, it's going down. We like to look at it as in this area of what happens when price goes up. You can see that momentum starts, price is going up, and then momentum fades, and that is a little bit of a precursor of what the market ends up doing. Now you can see momentum fading off, and you can see the struggle of the S&P 500. What we're looking for is we're looking for this lack of momentum to turn back up and cut back above the signal line, which happens to be the 10-day EMA of the PMO. And we'll look to see that cut back above. That would be a signal that momentum's back. It'll be a signal of a possible trend change. And it's actually a entry signal for our firm also. Let's go on over to breadth. So we have a negative PMO, negative momentum, but we have positive breadth. As you can see, we're looking at new highs versus new lows on this chart. This is the trend, and here's the actual day by day. You can see, like, as of Thursday in the S&P 500, 55 of the 500 stocks made new highs, only 2 made new lows. So if you got more stocks making new highs than are making new lows, that seems pretty bullish. The net of 53, and that's been going on for several days. So under the hood, we got more stocks working than aren't working. We have more stocks advancing than declining because we're above the 10-day moving average on that one. And we have almost 68% of stocks in the S&P that are above their 20-day moving average. So if we have all this good stuff going on with the S&P 500, why is the S&P 500 going sideways? Why is the S&P 500 going down? And that has to do with not everything is congruent right now in the S&P 500. So what we really have is we have value stocks that have been beat up for a long time. We have underperforming currently or before Max 7 stocks that make up most of the index. And now that's kind of switched over to underperforming AI. Let's just kind of look at some of that really, really quick. I think the best place for us to go to is let's look at the RS ratio. This is going to be a plot of the different markets that we look at versus the S&P. So in simple terms right here, what we want to do is we want to get involved in the areas of the market that are outperforming the S&P 500. So what are we looking at here? Well, we can see that we have technology that was really outperforming, now underperforming, right? And so that signals that there might be a switch. The switch doesn't always have to be definite. This stuff can chop around. Tech can regain control and continue higher. But we know at least right now it's definitely taking a break and it's definitely pulling back. So what is working? Well, industrials. So where tech was being exited, money looks like it's flowing into industrials because industrials is clearly now outperforming S&P. Well, this area is green and it's above this moving average. And we can also look at financials, doing a bit of the same. We can look at healthcare, doing a bit of the same. So in our analysis, we want to kind of see what's not working. Right now, we know AI is not really working as many of those stocks pulled back. Let me show you what I am talking about. So if we go on into looking at, let's say, MU, which was that was definitely working, right? $300 to 1,200. But now look at that pullback. And 1, 2, 3, 4, 5, 6 day pullback. Let's look at the pullback 24-ish% pullback. So do you want to be in that stock? Does it have to stop here? It could. It could turn around and go right back up, but it most likely might go down to this area. It could go down to this area. It could go down to this price. I mean, would you hold on to something from 1,200 all the way to 600, taking a 50% loss? So that's a little bit we're dealing with. Good gains here, but now dealing with a pretty strong pullback. While we're on this list, let's go ahead and look at what the previous challenge was, and that was the Mag 7. So now we have AI stocks pulling back. We have the Mag 7, right, which was pulling back before, which was, really hurting the market from making, breaking out into continuous new highs. Although we had the other 493 stocks or the other smaller stocks or the value stocks starting to perform, we had to deal with this. And the Mag 7, which is, Microsoft, that takes up a big portion of the S&P 500. I don't know the exact, it's something like 30 to 45% of the S&P 500 is just involved in these Mag 7 stocks. Here's Google, obviously pulling back. Look at Meta. I mean, we talked about this before, 30 to 40% pullback. These have just been getting trashed. Tesla down 7.5% on Thursday and just not looking too good overall. So you see these stocks were hurting the index. AI stocks the last couple of days have been hurting the index, while we see maybe some good things in, like we mentioned, healthcare, industrials, and financials. So let's look at that really quick. We'll go over here. We will go back to the RS ratio, and let's just look at a couple of these. By the way, here's tech. Let's click on tech. Tech in general pulling back, right? I mean, this would be a great place to find support. This would be a great place to turn back up. So we can't just dump them off our radar. The money might flow right back into there, but we do know industrials have been getting the play recently. And look, we saw the RS ratio against the S&P, it's outperforming. And now look at the chart. This chart looks much stronger than the recent couple weeks of the tech chart, right? Technology. So we should look inside industrials to see if there's anything there that we might want to entertain the idea of keeping on our watch list. We go over the healthcare. We had Eli Lilly, and you can see healthcare just, while tech has been pulling back, healthcare has been ripping. So money leaving tech going into healthcare. This is much, much better than money leaving the market and just going to cash or going to the sidelines and people being scared of the market. It's just time for some of these big, long movers to take a break. And then we'll have to see what happens after they take a break. Do they want to, do they want to move the money back into them? Financials, or will they keep them here? Financials. So look at financials ripping while tech is pulling back. So we have these different areas of the market working while others are taking a break, while others aren't working at all, like the Mag 7. And so that's kind of creating this, what we call rotation in the market. Another area to look at is growth stocks versus value stocks. And we can see growth, which is this is mega cap. And so growth, and this is value, MGK plotted against MGV for a long period of time going up. Now we kind of see maybe a little rounding pattern, and we see definitely in the short term growth pulling back versus value. And so here's the growth chart. Look at this area right here, and look at the value chart. Keeps going up. So the S&P 500 has a lot of its components are growth, but then just about the same amount of components are value when you start looking at it. Not exactly, but pretty close. And so here we have a situation where value is starting to get money, is starting to get some play. So we're going to be looking at these different areas back and forth to see really what is the next step of the market. But if this all sounds confusing, and it sounds like there is really no obvious answer, that's why we're in an uncertain market. That's why the markets are going sideways, right? And so part of our analysis is to understand when that's going on. And since we're both intermediate and short-term bullish based off of technical standards, we're going to be playing offense. But we're going to be playing offense cautiously. So when things start to break down, we'll have tighter stops. When things start to rip up, we'll add exposure back. And we'll look to see what some of the leaders actually are. So just doing a quick review, the condition is neutral. The intermediate trend is bullish. The short-term trend is bullish. So we got to be playing offense when both of these are bullish, but we have to be a little cautious because we're just kind of going sideways and it's chopping around. We're seeing strength in areas like financials, seeing strength in areas like industrial, seeing strength in areas like in value. But we've seen, very lagging Mag 7. Bitcoin, of course, is completely falling apart. We see tech now lagging. So what were the leaders? The triple Qs, the NASDAQ, what were the leaders are now the laggards. And so we're just trying to see what's going to be the next leading area. Are they going to go back to the AI theme? Are they going to go back to tech? Or are they going to continue to pile money into financials, industrials, and healthcare? So we're looking in that area to see if there's any appropriate positions. That's what I got for you this week. Take care. Have a wonderful weekend, and we'll be right back at it on